Three-day winning streak on the S&P 500, about to become 4 at the opening bell. Equity futures right now up 0.3%. Absolutely nothing to be scared of in that inflation report, according to many of you. Pushing equities up on the Nasdaq by 0.75%, and the rally resumes on a Russell up by 0.27%. There's your opening bell. Switch to the board and get to the bond market. Off the back of that CPI report 1 hour ago to the second, yields lower by about a basis point or two on a 10-year, 372, 371.83 to be precise. Dollar showing some weakness, euro some strength, back through 108, 108.04 in that currency pair, and crude higher by 3 percentage points, trying to recover and reclaim a 70 handle, $69 and about 20 cents right now. About 20 seconds into the session, your equity market shaping up as follows on the S&P 500, positive by 0.4%, on the Nasdaq up by 0.7. I can tell you the Nasdaq year to date up by 35% on the Nasdaq 100 year-to-date so far in 2023, and 6 months still to go. One stock to watch at the open is Oracle. Shares hitting a record high after the company reported better than expected results. The CEO, Safra Catz, writing, quote, "Both of our two strategic cloud businesses are getting bigger and growing faster. That bodes well for another strong year in 2024. Abby has more. Hey, Abby.
Hey, John. And it's interesting because that strength may not bode so well for Amazon and Microsoft. At least that is one of the pieces of commentary coming out of the street, that they put up such a strong cloud quarter, 54% growth in the quarter, driving both the top and bottom line beat, that the competitors, they may have a reason for pause. Now, looking forward, they expect to continue to see this kind of demand for the cloud, for the generative AI. And it wasn't just Goldman that's positive. You earlier were mentioning that they upgraded the stock from a neutral, or from a sell to a neutral. No small thing. Piper Sandler saying solid execution, improving cloud growth prospects. D.A. Davidson, interestingly, saying they may be a little bit of ahead of themselves on their outlook because they are so positive on their cloud business. But Jeffrey saying that the cloud is the highlight of the results, and the stock has room to grind higher on continued execution. So record high here, maybe more to come, John.
Abby, thank you. Oracle up by 5.5%. Yesterday, record high on Apple. This morning, pulling back just a touch from those all-time highs. UBS cutting the stock to neutral, writing the following: "We're downgrading Apple given persistent softness in developed markets and data that indicates growth is likely to remain under pressure. We do not believe Apple shares offer a compelling risk-reward, particularly in light of soft iPhone, PC and App Store fundamentals over the next 6 to 12 months. Not taking a big dent out of this rally, not even taking a bite out of it really. We're down by 0.3%, but notable this morning to see anyone downgrading Apple after a 41% surge year to date. That's the Apple story. Let's get to Manchester United, surging at the opening bell. This coming after a tweet from a Qatari newspaper spurred speculation that the team is moving closer to being sold. Isabel Lee has more. Hey, Isabel.
Hi, John. This has been going on for a while, around 7 months to be exact, and sports fans all over the world are very invested. In pre-market, it was trading as much as 30%. Now it's paired gains around 13%. Reports swirling overnight has sent the stocks soaring. So we have the Qatar Sheikh Hassim saying that it might be a success, this bid, and this is the 5th takeover offer for the Premier League team. He made it clear last week that this is the last time he's going to make a bid. Details are sparse for now, but reports say it's around 100% of the club. Hassim is the son of Qatar's former prime minister. His rival is British billionaire Jim Ratcliffe. So as of close yesterday, Manchester was valued at around 3.8 billion. So we'll see where it goes for now, John.
It seems like shareholders and fans alike do not want the Glazers retaining any kind of minority stake in this business. Isabel, thank you. And like Isabel, I've been struggling to follow this one. It feels like it's been going on for absolutely ages. Any clarity on that story? We'll try and bring it to you. Let's take a look at cruise line stocks this morning. Carnival, Royal Caribbean, Norwegian, all moving higher. JP Morgan and Bank of America touting industry momentum and increasing confidence in consumer demand. Bank of America analysts saying, quote, "The cruise industry's long booking window and strong current demand could allow it to be less susceptible to a slowdown in the leisure consumer relative to other areas of travel." Katie has more. Hey, Katie.
Hey, John. Yeah, Carnival leading the big three higher once again this morning, currently looking at gains about 1.3% after that double upgrade that you mentioned from Bank of America and JP Morgan yesterday. Now, both banks also lifted their price targets for the likes of Royal Caribbean, Norwegian yesterday, in addition to upgrading Carnival. And like you said, this all really comes back to the fundamentals. JP Morgan in particular sees the cruise industry enjoying continued demand momentum after meeting with each of those cruise lines headliners. Bank of America analysts had the same takeaways from those meetings, writing that industry demand is steady and the pricing environment is, quote, rational. Now, if we take a look at the stocks on a slightly longer time frame, after a little setback in March, cruise stocks have been soaring over the past month and a half or so. Royal Caribbean is the year-to-date leader with 2023 gains of over 90%, but Carnival in orange there. As you can see, it's quickly catching up. Norwegian, still the relative underperformer, but still year-to-date gains of 50%, John.
One thing you'll never catch me doing. I talk about this all the time. Katie, just hate a cruise. Just the idea of it. I despise the idea of it. But clearly you should not listen to me based on the year-to-date performance, Katie, that you just described.
I would also never get on a boat that big, so you'll catch me
and then
on
be
land.
Stuck there with... Anyway.
Not me.
Katie, thank you. Not me either. It's good to hear. Meanwhile, Tesla looking to extend its record rally to a 13th session, coming off another analyst record upgrade, this time from KGI Securities, boosting shares to outperform and writing Tesla's automotive investments in the US are paying off. Its AI prowess is underrated. Ed Ludlow has more. Hey, Ed.
Yeah, good morning, John. We have extended Tesla's streak to a 13th straight session, extending the record run of gains that the stock has seen. KGI's upgrade is one catalyst. There was also a note from Morgan Stanley late on Monday saying that it's time for Tesla to start thinking about a financial services arm so that in the next 9 to 10 million customers that they try to acquire, quote, they can give more optionality around monthly lease payments as opposed to outright cash purchases. You also will have seen the news on Monday that a number of charging companies in quick succession put statements out saying that they would adopt Tesla's North American charging standard as an option for their customers at their charging stations. That continuing to be a point of focus for Tesla, really, and what kind of a business they can evolve for themselves in opening up their network of chargers, fast chargers or superchargers, to peers and rivals, and seeing the pressure that some of the charging infrastructure rivals are under. We're up more than 107% year to date. Tesla, a stock up 107% year to date and extending that to a 13th straight session, which is a record, John.
Ed, thank you, mate. What a run. Up another 1.7% to 254. Here are the scores month to date in June. Tesla's been flying all year, but we've seen clear outperformance in small caps, regional banks, going against the grain for 2023. It is the debate of the moment. Can the equity market rally continue to spread beyond mega cap tech and AI hopes and dreams? David Costin of Goldman Sachs raising his price target coming into this week, explaining that, quote, prior episodes of sharply narrowing breadth have been followed up by a catch-up from a broader valuation re-rating. Marko Kolanovic over at JP Morgan pushing back, acknowledging that the real pain trade in the market is the breakout driven by cyclical value, but we do not see it getting confirmation. Any China stimulus is unlikely to be meaningful. PMIs could converge, but with services coming down towards manufacturing in the second half. Richard Bernstein of Richard Bernstein Advisors joins us now. Richard, wonderful to get your perspective and catch up with you, sir. It always is. Let's start with June. Is June going to look like the rest of this year?
Well, the way we're positioned, John, I certainly hope not. I think that we're in some kind of a speculative burst here. One could argue as to, how broad that is or how big that is or how long it's going to last. But I think, some of the things you've been talking about certain stocks going up abnormally, huge runs, this is not what bull markets are made of. This is a very narrow, tight, speculative leadership.
We're starting to see it spread though, Rich, through the month so far in June, to regionals, to small caps. Is there reason to believe that there's something there, something bigger?
Oh, I think that's certainly a healthy sign, but I don't think that we're seeing, we're basically seeing a pricing in of the perfect soft landing. I think that's kind of what we're seeing here. And I would argue the probability of that happening is actually the lowest of the three outcomes, whether we either have an economy that's much stronger than people think, an economy that's much weaker than people think, or an economy that's just right, the Goldilocks scenario. I think the Goldilocks scenario is the least probable of those three, but that's what's being priced in. And so, yes, you are seeing some broadening of the market, but I don't think we should call this a broad market.
This is what Stuart Kaiser of Citi's got to say. Economic growth is likely a necessary condition for a sustainable rotation into cyclicals. It's all been about scarcity of growth for him in the equity market, and to reverse that trend, growth would need to no longer be scarce. Now, Rich, looking forward, there are these hopes that China delivers some kind of stimulus package. We at Bloomberg have reported on that, the prospect of it, the proposals that are on the table this morning. JP Morgan does not sound optimistic about stimulus in China. Others have pushed back as well about what kind of effect it would have. Richard, are your hopes for rest of the world outperformance pinned on what China may or may not do in the next few months?
Well, John, first I want to remind everybody that it was my group at Merrill Lynch that 30 plus years ago first discovered that growth outperforms when growth is scarce, when earnings growth itself is scarce, and that value outperforms when growth is more abundant. So I think there is something to that, but I think what one has to realize that the leadership that we are seeing and the idea that only 10 or 20 stocks can grow is such a dire forecast of corporate survival going forward that it's kind of silly. It's not like the Nifty 50 anymore. It's the Nifty 5 or the Nifty 10. That is such an incredibly dire forecast and says that there are no growth opportunities anywhere else in the world, not only in the sectors in the United States, but anywhere else in the world. That seems way too bearish to me. I don't think that people understand that the focus on the top 5, 10, 15, 20 names as the only growth opportunities is an incredibly bearish view of the global economy. And we're just not that bearish. I mean, people say we're bearish because we don't like the top 5, 10, or 15 names. But in fact, we're actually quite bullish on the global economy relative to people are thinking. So I don't think it's just China. I mean, estimate revisions in Europe are leading the world. So this is not just a China story.
Anyone, Rich, who missed out on the 35% rally of the NASDAQ 100, by definition for some people, apparently is bearish. So, Rich, let's talk about the opportunities outside of America. Europe right now challenged by the slowdown in China. They can't reopen twice. We're talking about stimulus now. Can you answer directly, does that rest of the world outperformance, does that story of the rest of the world economic growth picking back up again, does it require stimulus from China?
I don't think it requires just stimulus from China. Certainly, the more that China is going to stimulate, the better the story becomes, of course. But I don't think that's the case. I think it's pretty well known that China's been limping along for a while. But yet, as I said, earnings revisions in Europe are the strongest of any region of the world right now. And I think people know that China's limping. So I don't think it's totally dependent on China. And in fact, the other side, John, is that whether you're in China, remember, China sells at about a half to a third of the valuation of NASDAQ. The issues that we know about China, the issues that we know about Japan, the issues that we know about Europe are pretty well discounted into stock prices versus the very high valuations for those top 5, 10, 15, 20 names where it's like a perfect outcome is already embedded in the prices, rather.
Standard Chartered agrees with you. They think we're too bullish the US, too bearish China. So, Rich, let's put some trades on it. How would you express that view right now? Through equities, foreign exchange, what would you do?
So John, we actually have it at my firm, Richard Bernstein Advisors. We have our lowest U.S. weight in the history of our firm. We have never had this low weight for the U.S. relative to non-U.S. 10, 15 years ago, we had 80% of our equity weight in the United States. Now it's probably about 45 to 50%, depending on the particular portfolio. So I think that's number one, right? That people should be looking outside the United States. Do not be geographically myopic. Number two, I think, look, if you think the economy is going to rev up, if you think inflation is going to come back, clearly you want to play more commodity-oriented sectors, commodity-oriented countries. If you think the economy is going to slow down more than people think, then it would be traditional defense. But as I said, I have a very tough time understanding the love affair with the top 5, 10, 15 companies that need the perfect slowdown, the perfect soft landing.
Well, Rich, the rest of the world's a big place. What are we talking about here? Miners in London, energy players across Europe. What are we talking about? Tech over in China, Japanese equities, banks, what?
Well, I think one has to remember that in Europe, the two biggest sectors are energy and consumer staples. So, one of the reasons we like Europe is just simply those are the two dominant sectors there. If you're looking at Japan, Japan's market is very related to a weak yen. If we go back 30 or 40 years ago, there was no relationship between the Nikkei and the yen because the Japanese economy was so productive, the currency didn't matter. Well, we know the Japanese economy is not a productive economy because of their demographics and other issues. So now they're very dependent on a weaker yen. They can only only compete based on currency, based on price. So the weak yen, which we have seen, is boosting the Japanese equity market as it has been, through multiple cycles. So I think there's a number of different ways to play this around the world. As I said, I think the world is very, very attractive.
Richard Bernstein making that point several times. We'll continue this conversation another time. Richard, it's good to see you. From New York City, this market positive 0.7%. Call it whatever you want. We're up more than 20% from the lows of October. A lot of people would call that a bull market. On the Nasdaq, up by 0.75%. Inflation data 1 hour and 14 minutes away. Nothing really too ugly in it relative to expectations going into the Fed tomorrow, leaving the door wide open for them to skip, maybe even pause and stop hiking interest rates. This from the president just moments ago. The CPI report shows progress on fighting inflation. Coming up, the former president heading to court.
We obviously take very seriously our responsibilities to protect classified information and to protect the nation's secrets. And what we're focused on is doing exactly that.
That conversation up next. Equities up this morning about 18 minutes into the session, positive by 0.5%. Big spectacle later on this afternoon. The former president, Donald Trump, set to appear in a Miami court after being indicted on 37 counts for allegedly mishandling classified documents after leaving the White House. Joining us now, the Bloomberg team, AMH in D.C., alongside Kenny Nines in Miami with more. Kenny, just walk me through the next 6 hours.
Well, President Trump is expected to appear at that federal courthouse at 3 p.m. Eastern time. We may not actually see him arrive. He is likely to walk in via an underground tunnel. But what will happen once he is inside is he will be arrested and then processed. He could potentially have his fingerprint and mugshot taken. He could even potentially have to forfeit his passport. Then he will head up to a courtroom on the 13th floor, we understand, appear before a judge and plead not guilty because, of course, he has maintained his innocence related to these federal criminal charges. 7 charges in total, 37 counts of them. And, of course, this is the first time in history a president will have been arraigned related to federal criminal charges. As for who will be with him in the courtroom, we understand it'll be his existing attorneys, Todd Blanche and Chris Kice, after he unsuccessfully attempted to expand his legal team with a qualified lawyer down here in South Florida, despite interviewing potential candidates all afternoon yesterday. And then, of course, there will be who potentially could be outside of the courtroom. In addition to all of us journalists, there could be as many as 5,000 up to 50,000 protesters in Miami today, according to the police chief. Of course, President Trump has called on his supporters to come out and peacefully protest today, but security will be intense for any potential violence. And then, of course, once the events here in Miami wrap up today, President Trump is getting back on the plane to Bedminster, New Jersey. He will hold an event at his golf club there this evening, speaking at 8:15 p.m. Eastern time, and then having a donor event. The campaign expects he could raise $2 million tonight after making history with this federal agreement in Miami this afternoon. John.
Back on the campaign trail, AMH, Governor Christie making comments, Nikki Haley making comments. What are they saying?
Well, you're starting to see the rhetoric really heat up against the former president, and the criticism when it comes to Chris Christie. We were all expecting this, given how we know he has spoken about the president recently. But this town hall, Jonathan, he said it was an ego run amok, vanity run amok, and he said he hasn't won a, quote, damn thing since 2016. He's a 3-time loser, and then repeated it, loser, loser, loser. That kind of rhetoric is now seeping into the campaign trail. And then you had Nikki Haley, Jonathan, the former president's own UN ambassador, yesterday really start to amp up her criticism as well. She talked about the fact that if what she saw in this indictment, if it were to be true about the handling of classified documents, talked about the fact that it would put, and she's a military family, it would put military men and women at risk, and she said it was reckless, Jonathan. Also, Tim Scott, while again he went after, quote unquote, what they would call Biden's justice system, many want to try to politicize this on the right. He did say it is a serious allegation, but then, of course, made sure he mentioned that you are innocent in this country until proven guilty.
Katie, let's finish on this. Legal representation. Do you have a better idea at this time this morning as to what kind of legal representation the former president has?
Well, we understand that it'll at least be his 2 attorneys that he still had maintained even after 2 others resigned after this indictment came down last week. That would be Todd Blanche and Chris Kice. But his attempts yesterday afternoon after arriving in Miami to get an experienced lawyer from South Florida who would be qualified and willing to represent him proved to be unfruitful. Of course, there are a lot of attorneys who seem like they don't want to touch this case either because of, even though it's high profile, because of the ramifications potentially of losing it. And of course, that indictment that was unsealed on Friday is pretty extensive, has photographs, has actual taped conversations between President Trump and others regarding these documents. And a lot of attorneys we've spoken with here at Bloomberg think that this is a pretty powerful case for the prosecution. Maybe there aren't many that are eager to go up against it.
Kelly, thank you. Down in Miami, alongside AMH in Washington, D.C. Looking forward to the coverage from both of you coming up a little bit later on this afternoon. Let's get you some sector price action. We can do that with Abby. Hey, Abby.
Hey, John. Well, we're looking at a bullish sector composition, not surprisingly, with the S&P 500 heading to its 4th up day in a row, the longest winning streak since early April. Energy, materials, both up more than 1%. Financials up close to 1%. So we're broadening out that breadth that analysts are looking for, strategists on the street, away from big tech. As for the tech sector on the day, it's interesting because earlier I had an alert on NVIDIA, almost briefly in that $1 trillion club, but back below it. But you can see that Oracle hanging on to some of those gains. Tech overall underperforming some of the winning sectors, up 0.4%.
Abby, thank you. Your trading diary up next. No news is good news for this equity market. No real news in that inflation report relative to expectations. Equities up and small caps outperform on the session and on the month. That's the price action. Here's the trading diary. Secretary Yellen testifying before the House at the top of the hour, plus President Trump due in court in Miami this afternoon. Fed rate decision, Chairman Powell news conference tomorrow. US retail sales, claims, and an ECB rate decision on Thursday. And finally, a rate decision from the BOJ and UMich sentiment survey to close out the week on Friday. That closes out this morning for me. Good morning. This was the countdown to the open. This is Bloomberg.
From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
It is 30 minutes into the U.S. trading day, Tuesday, June 13th. Here are the top market stories that we're following for you at this hour. Inflation is something for everyone. Prices fall, a step in the right direction, while core stays sticky at about 0.4%. You got tech up, two-year yields flat, dollar lower. So are we there yet? Or not till July? The inflation print does give the Fed room to skip June. Now the focus turns to July. We're going to see what would have to change for the Fed to get more hawkish. And redemption lockdown. O'Day Asset Management shuts one fund and gates two others as investors try to flee after more sexual assault allegations against its founder, Crispin O'Day. We're going to have the latest. From New York, I'm Alex Steele with my co-host in London, Guy Johnson. Welcome to Bloomberg Markets. I hate to say it, but it feels like a bit of a Goldilocks kind of number. Something for everyone. Doesn't really change the status quo.
I don't think it's Goldilocks, but it doesn't change the status quo. I absolutely agree with that. This was a number that everybody kind of anticipated. Things are moving in the right direction. What I can't figure out, though, Alex, is if this is the number now, why should the June number that we get in July change things sufficiently for the Fed to be hiking in July? If they were going to go, why wouldn't they go now? Why would they wait? What are they thinking is going to happen between now and then? That's the bit that I'm really struggling with.
Well, this is where I feel like it does get to the Goldilocks scenario, because prices come down, but not fast enough. So not fast enough to materially change the outlook for the Fed or move markets, but enough that it takes away the pressure for an immediate hike. So the question then for me becomes, how quickly do those prices continue to roll over?
Yeah. And that's the question. If the rate of change starts to slow from here, then you could see the argument for maybe wanting to do more. Presumably it will get harder for inflation to come down from here. But if it doesn't, if we continue at the current trajectory, why not hike now rather than then? That's the bit that I can't figure out. I'm really struggling with this. So our question of the day kind of takes us towards this. I don't have the right answer.
Yes. But I'm going to ask the question, should the Fed hike in July? We were kind of bandying about this earlier today. Omer Sharif, Inflation Insights founder and president, joins us here on set. Omer, great to see you. Okay, so what do you think? What changes to have a hike happen in July?
I think they should probably skip July. And the reasoning is pretty simple. We got a strong core print today, 0.44. It is going to slow markedly in the June print coming up 2 weeks before that July meeting. So we're going to see used cars come off pretty materially next month. So the core is no longer going to be printing 0.4. We're going to get a step down, I think, to around a 0.2, which we haven't seen in a long, long time. So I think that, number one, is one reason for the Fed to skip July as well. The second is today we saw the super core, so taking out that core services X rent and OER data, up 0.24. Last month it was 0.11. So the average has come down to about 20 bips, which, by the way, is what the 2017 to 2019 average was. So the super core has slowed down. That's the thing they're most worried about. Chair Powell will give a big speech about this. So that super core is cooling. And that whole wage story is also sort of decelerating. So I think that everything's sort of lining up for inflation to come out the way they would like to see it. So far they've said unacceptably slow progress. Well, I think we're on the cusp of seeing that progress that they want to see, and I think that should buy them more time to keep watching the data.
So do you think the Fed could be done here, Omer?
So there's what I think they should do and what they probably will end up doing in July, because I think on Wednesday you're probably going to get a hawkish skip. I think they have to obviously raise the inflation forecast a little bit from 3.6 to probably something around 3.8 or 3.9. The unemployment rate is not going to go up as much as they thought. That automatically probably argues for at least one more hike penciled in. And you've sort of heard all the Fed speak. It is sort of a grudging skip, if you will. People have said, okay, but doesn't mean we're done. So I think they really do need to see that June core print come down to sort of a 0.2, which is what I'm expecting. But I think another third super core that's in that 0.2 type range, that should give a lot of